Hello, it's Rhonda Thomas, and we are ready to start Managerial Accounting's Chapter 3 coursework. So I will try to make this as brief as I can. We are working in process costing. Okay, so be sure to do the intro exercises first, because this can be a little bit of a challenge, but we get through it every semester. Okay, I am in Cengage on number 1, and I'm going to do all of these because you're going to have one just like it with different numbers. So I don't mind. So first thing we're going to do is let's just remember that we are going to make a lot of these are going to have part of the production report listed. And this is all about WIP, okay? The work in process accounts for the various processes and departments that a company would have. So this first one says they have estimated that total manufacturing overhead cost for the blending department for the coming fiscal year beginning February 1st will be $689,700, and their estimated total direct labor costs will be $627,000. So instead of direct labor hours, they're going to figure out the relationship between the cost of the overhead and the cost of the labor. So I'd like for you to look here with me, and I will try to make this brief and try to explain the best I can. So here's the T account, okay, for blending. This is the debit side. This is the credit side. Here is the predetermined overhead rate. We're going to put our manufacturer overhead rate and our estimated direct labor cost. And when you do the math, that comes out to 110%. So you say, what does that mean? That means that for every dollar of direct labor they have $1.10 of overhead that gets applied. Okay. Remember, applied overhead is based on estimates, and it goes in the manufacturing overhead account. So here's an example of one right here. Okay, so we got the predetermined manufactured overhead rate. So this is saying that whatever direct labor is, this is 110% on top of that. So once again, for every dollar we have in direct labor, we'll have $1.10 of manufacturing overhead applied. Okay, so it says journalize the entry to apply manufacturing overhead to production for February. So it says during February, the actual direct labor cost is $54,000. Okay, so we're going to take $54,000 times $1.10, and we get 59,400, and it's going to go in our work in process account. Okay, work in process for 59,400, and it's going to be credited to the manufacturing overhead. And since this is blending, manufacturing overhead, the blending account has its own. All right, so I put the debit here, but I put the credit here. Okay, and so now they want to know on February 28th, the balance of the manufactured overhead blending department. The other piece we need is the actuals that happened are 61,800. So notice that number and the number we got for our overhead applied is pretty close. So this is going to go in here, 61,800 actual, 59,400 is what we applied, and we have a debit normal balance of $2,400. Okay, it is a debit. So you do need to understand that if you have a debit balance in this account, it's underestimated, under applied. So the actuals were more than applied. The opposite is true. If this account has a credit balance, then we have over applied and overestimated. So once again, the debit side means that you didn't apply enough. So it was under applied, not enough. If this is actual, this is estimate. We may have to change our amount that we keep, right? We may need to get it up a little higher, something closer to this, but you probably won't make a change with just one difference. And this is a variance, by the way. This is a variance. These are what the estimate, the application was created by an estimate, and then the actuals came in, and then we compared the two so that it would have a 2,400 debit balance. Okay, here we go. Now, I want you to see that I have got quite a bit of information on these screens. I understand. So what I've done is here's number 2. Okay, so let's just pay attention to what's up here in number 2. All right, this is called equivalent units of production. So this is first cost in, first cost out. Direct material costs are added when each unit begins. So when you see beginning and ending WIP that are only a certain percentage complete, it means that those items are not complete with their conversion costs. They are complete with their direct materials costs. So be careful. Okay, let's be careful. All right, so work in process. There are 640 units in work in process. Okay. Let me make sure. This is number 2. Okay. 640. So that's all right. You get to watch me do it. That's fine. So 640 is up here. Okay. And then, nope. Okay. We want ending inventory. There are 720. There we go. 720 units in ending inventory. There are 13,600 units that were completed and transferred out. So in total, we have 14,320 to account for, okay? To account for. So we're going to start with the beginning inventory. Let's just do the whole units first. You just put in whatever numbers they say, because all of these products eventually will be completed. Okay, they're just not, you're always going to have some partially completed units in conversion or in process costing, because manufacturing never stops. Okay, it never stops. So we're going to start with beginning inventory of 640. Okay, then we're going to put in, we don't know what started and completed is, but we do know how much was transferred to packing. So 13,600 were completed and transferred to packing. Put that in. So some of these you have to understand the relationship. And then the ending is 720. And now, in order to find our started and completed, what is it that goes with 640 that will get us a total of 13,600 being transferred out? Well, here is the math. Okay, here is the math. Okay, so hold on. Let me get rid of that. All right. So the math is the started and completed is the completed and transferred. It's this minus the beginning inventory. All right. So we have 12,960. And now we just add these two. Don't add all 4, add just the 2, the transferred out and the ending inventory. And if we do it right, 14,320, it matches the total units that I have here, so that's a good thing. Now we're going to get into what's called step 2. Okay, step 2 divides our units into direct materials and conversion costs, and they're called equivalent units. Okay, and we have 3 groups of them. The first group is saying that as far as these 640 units, we don't need to add any more direct materials. So this is going to be a 0. Okay, it's going to be a 0. Now here comes the amount, and it says that the beginning was 40% complete. Now I have that listed here. Beginning WIP balance 40% of conversion costs complete in prior period. So 40% of these were completed in the month before. So then you use your whole units times 60%. So here's where I'm at. We've got 60% of the whole units, and I went ahead and put beside it what we're calculating there. So we're getting 384 equivalent units as far as conversion costs are concerned. Okay, the nice thing about started and completed is it is the same for both direct materials and direct and conversion, because if they weren't completed, they wouldn't go out. And once they are, okay, so then you're going to add down to get transferred to packing. Okay, transferred to packing. So we just add down and 13,344. Okay, now we're in ending inventory. Let's read what it says. Okay, so we've done group 1 up here, group 2, and group 3. Group 3 is the ending WIP. Okay, they're saying there's 720 units and they are 40% complete. Okay, 40% complete. So all of them, we had to put the direct materials in, all of them, for the month. Okay, and then this is going to be the whole number times the percent complete. Now this one up here, we did the percent complete, the inverse of the percent complete, right? The inverse of the percent complete. But now here we are. So we're going to take 720 times 40% and you get 288. And once again, I put it right there in the parentheses so that you would be able to see it. So then instead of 720, it's 288. And now you only want to add these last 2. Okay, and I have this in my spreadsheet right here. Okay, and then the conversion cost column is 13,632. All right, so this is doing step 1 and step 2 of that production report. Okay, and that's what I did right here. Okay, that's what I did right here. Let's go to the next one. Okay, so these are equivalent units of production. Okay, equivalent units of production. So we're ready for number 3. Okay, ready for number 3. Let's get started. So we're the baking department. All direct materials are placed in process at the beginning of production. Yep, that's what that means. Okay, so it says, so they have given us our beginning inventory of 9,000, and they said that we received enough direct materials to do 162,000 units. When you add those 2 numbers together, there's your first double check that things are working out, because when we're all said and done with the whole units, these 2 must match up. Okay, so group 1, and you're just going to have to, this is very detailed. Group 1, beginning WIP balance, it's 60% conversion cost complete in a prior period. So 3/5 is 60%. So whole numbers times 40 to finish conversion costs. So we put the whole units there. 9,000. We know that 164,100 units were transferred out. Okay, so. All right, so let's put in what we know. Let's put in our whole numbers. 9,000. Okay, then we know how many went to either to finished goods or the next process. 164,100. Be careful, finished goods. Okay, and then inventory at the end. That's what we're getting ready to find. Okay, but we can back into how much this started and completed is. Okay, so then we can do a total here. Total equals what we just found, 171,000. Now we can back into the inventory in process. So if this number plus the ending number equals the total, then we're going to use. So here is total whole units minus the amount we completed and transferred. Well, that leaves us with 6,900 units in ending inventory. Okay. All right. Now we're going to do the equivalent units for direct materials. Whenever we start off with the beginning, we don't need to add any more costs to direct materials. They're already there. So this is always going to be a 0. Okay. And this is always going to be some number. And we got to remember how complete they are. 3/5 is 60%. So if we want to know 3/4 or 3/5 is 60%. And to finish them, we need to do 40%. So we take 40% times the whole units of $9,000 right here. So 40% of 9,000 is 3,600 units. Let's key that in. Okay, the nice thing about started and completed, once you know what it is, then you can just repeat this across. Now you add down. Okay, and that's why I have my spreadsheet there, so I don't have to mess around with a bunch of calculations. Okay, now we're ready for the ending inventory of 6,900 units. Well, all of those received direct materials this period of time, this month in August. Okay, but how complete is this balance? It is 4/5. That's 80% complete. So when it comes to the ending balance, we simply just use the percent complete that we're given. So we're going to take 6,900 times 80%. We're going to get 5,520. Okay, 5,520. And then you just add these two lines. Okay, don't add them all or you'll have all kinds of troubles. Okay, so we're going to add down 162,000 and 164,220. Okay, so this is taking care of, and now here's the thing, determine the number of units in work in process inventory. Okay, so the number of units at the end of at the end. So the number of units, that was that first 6,900. Yep, sorry. 6,900 is the number of units in work in process inventory at August 31st. Yeah, because this is the ending balance, because the beginning balance is 9,000. So be careful. Okay, be careful. Okay, onward we go. Number 4. Okay, another kind of problem. I've made this one longer because we're going to really go through the whole production process. Okay, production report. So the first two Steps has to do with units only. Okay, so let's start off. What is our beginning units? I like to calculate those. Our beginning units, they're $6,600. So that's going to go there. We received direct materials for 118,800. So total units we're going to account for is 125,400. Okay, and when I get done here, all right, so 6,600 starts with beginning WIP. Okay, that we know we transferred out 120,300. So completed and transferred out. We know the beginning inventory is part of that. Okay, then we're going to back our way into started and completed. Okay, started and completed. So I had to find that. And they don't have a place to put in your equivalent unit. So if it were me, I would make some columns, even if you're just going to put it in pencil. But you could also try it in Excel if you want. So there's how much are started and completed. So, and then it says that our beginning inventory is 2/5 complete. That's 40%. Remember, if it's beginning, we flip it and use 60%. So 60% of $6,600 is 3,960 units. Okay, put that there. Started and completed. Once we know what it is, then we fill that in for both columns. Then we add down. Okay, then they're going to make us find how many units are in ending inventory, but we do know the cost. Okay, we do know the cost. So remember, this number has to add up to total units. So I just plug this in. Okay, and then to find the 5,100, you simply take the total units minus the completed and transferred to the to finished goods or to the next process. Okay, so that's how I found 5,100. So 5,100 is the ending balance, and we don't have any partially done units according to the materials. So whatever the materials is, whatever the units are in at the end of the month, that is what direct materials will be. However, how complete are they? They are 40% complete. And remember, you don't flip to the inverse on this one. You only do the inverse up here. All right, so we're going to take 5,100 times 40%. And then we add down. Okay, so when we add down, these are total units. This is your direct materials EQ units and your conversion cost EQ units. Yep, these are very important numbers. Okay, because we're going to get ready to apply some costs now. Now that we know what our equivalent units are based on direct materials and conversion, now we can figure out the cost per equivalent unit. So let's go up here and see. We brought in direct materials of 201,960. I'm going to fill this in under direct materials, 209,960, and then I'm going to divide it by our EQ units for direct materials and hit enter. When you do so, you should get a dollar value. And what did we just find? We found the direct material cost per EQ unit. Okay, per EQ unit. So let's put $1.70 here. Okay, now let's do the same thing for conversion. Even though they don't have the same equivalent units, that's okay. Now you have to remember to add, labor and manufacturing overhead. Be sure you add the debits here not these. This is the balance that's being kept. So this is kind of like a ledger with the balance being kept. All right, so we're gonna add 53,630, which I've done that right here, and 30,160 together. And it so happens that our total conversion costs are 83,790. And then when we divide that by our EQ units for conversion, we get 70 cents. Yep, 70 cents. So you say, what did we just find? We just found direct materials cost per unit is $1.70. Okay. Oh, we're baking something. So whatever we're baking, the cost that we're it's costing us $1.70 in materials, and it's costing us 70 cents in conversion. Okay, so they wanted those two numbers, and you can just check it. Okay, now comes the part where you allocate this information into groups 1, 2, and 3. All right, so here's what I would say. So once again, this is allocating cost to the units transferred out and ending inventory. Okay, before we do that, I want to take a little tally here. So let's start with our beginning WIP. I got $12,936. The direct materials that came in, the direct labor, the manufacturing overhead. I added all of these. And here is a number that will help us. That is all the costs that are in WIP baking, okay, for the month of August. So that can help us. So we'll just keep that there. All right, I'm going to start with the beginning balance, 12,936. Now, we're going to add an amount to this balance. So this balance happened, if this is the month of August, so this balance was the ending balance of July. The ending balance of July becomes the August beginning balance. So I'm putting that in. 12,936 is right there. We don't have to add any more for direct materials to group 1, which is the beginning balance, but we do need to add some conversion. So what we do is we go up here and get our equivalent units as far as conversion is concerned. And it's 3,960 when you do this math here. All right. And then you're going to take that number times the 70 cents, which is your conversion cost, or your conversion EQ units or cost per unit, right? It's the conversion per EQ unit of 70 cents. That's what we put there. Okay, so here's what we've done. Once again, here's the beginning that was sitting there from July, became the August beginning balance. We're going to add 3,960 units times 70. So we're going to add an additional 2,772 to complete those that were in beginning inventory. Okay, beginning inventory. So this is costs to account for. So here we go. Here comes the very first one, but this is showing the additional conversion costs we need to add because it was just 12,936. But we've added $2,772 to that. And then therefore that makes the beginning work in process to complete what was sitting here. We added that extra to it. So that is the cost of the beginning work in process completed during August. Okay, now we're ready to go to the units started and completed during August. So up here, I have a total of 113,700 that we started and completed. And okay, so then you're gonna take this times $1.70 and you get 193,290, not quite done yet. Now we're gonna go over here to the conversion column. And we're gonna take the started and completed units times its $70 cost. Okay, and then we're gonna add across. Now, we didn't have any there from the prior month. That's only in the beginning balance. Okay, so for the month that we're looking at, you add those together. Okay, I got 272,880. Let's see if we're right. Okay, 272,880. Okay, that's good. All right, then we have one more piece. One more piece. So we don't necessarily, so if they asked us how much costs were credited to this inventory account and debited to either the next process or finished goods, you can see it right here. Here's how much money was credited when those goods moved. Okay, so I don't necessarily need to add those, but now we're down here in the ending balance. It is okay, just a second. 80%, okay, 2/5 is 40%. I think I have this incorrect here, just a second. So ending balance, 2/5 is 40%. So let's go ahead and put this in. I must have forgot to key it in. All right. So we're going to take whole units times 60%. And let me see if I did that here. We're working on this one. Okay. So this is, all right. So, okay, we've got, let me just do let me see what my formula is here. So, okay, okay, on the ending, we're going to do 40%. Okay, 40%. If it's ending on 40%, that is the percent you use. Okay, the only one that gets a little bit challenging is the beginning balance. Okay, so now that we're at the ending balance, because we're in group 3 now, we're wanting to put in the cost of the ending work in process. All right, so we're going to go up here and 5,100 times $1.70, okay, is the direct materials for those that are sitting there in ending inventory. And then 2,040, which is 40% of 5,100, that's the equivalent units. We're going to take it times it's 70 cents. Okay, and when we're finished, we should have, when you add these two numbers together, okay, and by the way, they're telling you what your ending balance is. That's what it is. So you could key that in right away if you wanted. That's nice. Yeah, so, but I went ahead and proved it. Okay, so it turns out that when you take the total, just a second, when you take the total, remember we got this total costs, I put it here, and we know these are right, 15,708 and 272,880. Then I plugged for $10,098. So how you find that is you take your total and subtract these two, and then you should get your ending. Okay, but they gave us the ending balance. We just didn't know how many. So how many is 5,100 and 5,100 times 40% is 2,040 in equivalent units. Now, assuming that the direct materials cost, let's double check that I got this. Okay, so I know when I saw this, I went, well, there's the ending balance. I don't even have to do the math for it. So now I want you to take that ending balance, 10,098, and we're going to add the costs of the completed and transferred to finished goods, and it's 288,588. And voila, all three of these must add up to the same amount if we did it right. Okay, now I realize this might take you a little bit. If you want to follow the book, that's fine. This is following a little template that I have, and it's working for me all right. Okay, and then finally, assuming that the direct materials cost is the same for July and August. So what is our direct materials cost for August? It's $170. So we're going to assume that in July, it was $1.70. And August, it's $1.70. So let's put the cost of the beginning work in process. So I'm talking all the costs. Okay, I put 15,708. Okay, that's all the costs to finish those 6,600 units that were 40% complete. Here's how much it's going to take to complete 100% of it. All right, so we're going to start with that. Then we're going to start with our beginning work in process units, and we're going to divide, okay, beginning cost per unit. So when you take 15,708 and divide by 6,600, you get $2.38. That's the beginning cost per unit. So these units here have a beginning cost of 12,936. If you did the math, this divided by this should get you $2.38. It said for us to subtract the direct materials of $1.70 because it hasn't changed. Okay, so you say, where'd you get $1.70 from? Because they said use the same materials cost, which is right here. Okay, so that hasn't changed. So that gets subtracted. That leaves us with okay. That leaves us with 68 cents per unit in July, because remember, the beginning inventory in August is the ending inventory of July. Okay, and then the cost in August was 70 cents. So the difference between 68 and 70 is a 2 cent increase, right? 2 cents increase of the conversion costs. Okay, so the direct materials stayed the same. So we just had to drill down until we got to conversion cost of 68. So from 68 from the month of July to the month of August, EQ is, once again, is equivalent units. So the cost per unit in July and the conversion cost per EQ unit in August, right? I know that one was tough. Okay, let's keep doing some more now. And I'm just keeping using the same template. Okay, we're on number 5. Okay, so let's put in what we know. First in, first out, direct materials costs are added when each unit begins. Beginning inventory starts with 5,000. And we received enough direct materials to make 118,000 units. So altogether, we have 123,000. Okay, I'm going to start my whole units. So we go with 5,000. Okay, and then we know 115,000 were sent to finished goods. We can back into started and completed, right? Okay, so let's go ahead and start putting some of this in. We've got 5,000 in whole units. We know the transferred to finished goods is 115,000, which we know we plug in 110,000 and we get this to add correctly. Then the ending inventory we're waiting for, but our total units, we know is 123,000, 123,000. And then we can find the missing piece, the ending inventory units. So what number has to be added to 115,000 for the total units to be at 123,000? So let's look. Okay, so here we are. It takes 8,000 to go from 115,000 plus 8,000 is 123,000. So we're going to put 8 here. Okay, so that's the whole units. That should match up with this one. And now we're going to do equivalent units based on direct materials and conversion costs. So when it comes to beginning inventory, you are never going to have any equivalent units in beginning inventory for, you're not going to have any direct materials, okay? But we will have for equivalent. So this says that this is saying beginning balance is 30% complete in a prior period, meaning that we've got to finish 70% of the conversion costs on 5,000 units. So 3,000 times 70% should equal, okay, so one more time. Yep. 5,000 times 70% should equal 3,500 here. Okay. So the nice thing about started and completed is you just pick it up and put it back down again. Now you just add. I left out a 0 there. Okay, we just add down. By the way, that's why there's an equal sign there. And then there's an equal sign there. So that's supposed to help direct you with what to do. Now we're going to add down. Okay. And then the inventory in ending, right, is all of them. All of them have received their direct materials. And then the ending inventory is 35% complete. Okay, 35%. Okay, and then we'll know the number of units. All right, for this. All right, so the number of units in the end is 8,000. So we forgot to put that in there. Yep. Okay, so there it is. 8,000. Okay, and then 8,000 times, and I got to see which one this is. So it is 35%. Yep. So I'm trying, if I miss something, I just want to fix it so we don't have any troubles. All right. So since I made the template, all right. So now we're looking at 35% of this number, 35% of, where am I? Okay. Oh. Okay. Sorry about that. All right. So these numbers here, okay, you take your equivalent, so this is group 3, right? 8,000 times 130. And that is going to produce here. Okay, so we're going to take equals and we have to be careful. This is the beginning balance, so I don't want to mess something up. Oh, beginning balance times, yep, times the $1.30 is going to give you 0. So that's why you've checked it. Okay. Then in group 1, we have 3,500 units times the equivalent cost per equivalent unit is 430. And that equals, when you take that times each other. Okay, then when you add across, here's your beginning balance. And this is how much we needed to add to finish the ones that were sitting there in the beginning. Okay, so one more time. These 8,000 sitting here represent 35% complete, right? Which I believe. Okay, so then 8,000 times 35% is 280. Okay, 280, 2,800. Now we're going to add down. So we take 110, and we just add 2 columns, not all of those, or you'll mess up, or you won't get it right. Okay, then this one is 116,300. So we've done our step 1 and 2 there. Okay, now we're going to get our cost per equivalent unit. Cost per equivalent unit. So here are our EQ units for direct materials. Here's our EQ units for conversion costs. Now we need to see what our costs are. So for direct materials, it's 153,400. So I put that in there. And then for conversion cost, it's these two added together. So it is 360,100 plus 139,990. Those two together add up to $500,090. And we're going to add across. No, we're not going to add across. Sorry. We're going to then take our total and divide by our equivalent units to get $1.30 of direct materials per unit. $1.30. Okay. Same for conversion costs. Conversion costs of $500,090. Okay, so one more time, let's put $1.30 in here. Okay, so then your conversion costs, one more time, is your direct labor and your manufacturing overhead. So you're going to calculate that together right here for conversion costs. See, I put DL and MOH. And then that total is going to be divided by the equivalent units so that we have conversion costs per unit of $4.30. Okay, $4.30. So one was $1.30 and the other is $4.30. Okay, then the next thing they want to know is what is the total for started and completed here? That's what they're asking for. Cost of the units started and completed during the period. Okay, so down here, we're going to allocate cost. And we have to refer to this up here sometimes because we forget what's going on. So I've got 12,500. We don't need to add any more direct materials costs to the ones that are sitting there in beginning inventory. They are a certain percent complete. They are 30% complete. So I want to put that on here. 30% complete. There it is. So you've got to use 70% to Okay, cost of the units started and completed during the period. So cost of the units started and completed, here we go. Okay, so this is 110,000 units times a cost of $1.30. Okay, so all right, and then this is 110,000 units. Okay. All right. Oh, this, yeah, just click on it. And this one is 110,000 units times $4.30. Okay. And so when you add these two together, you get that. Okay. You get $616,000 in started and completed costs. Yep. So let's see what we get here. 616,000. And there it is. Okay. That's why you keep these columns separate. That's why each of these have different values. All right, so let's keep going. We're on number 6 now. Okay, we're going to use the same strategy. This is first in, first out. The direct materials are added when each unit begins. So let's start with if we know how much units we have in WIP. Okay, so it looks like we have 5,000 units. Okay, so 5,000 units, yes. And we brought in enough direct materials to make 118,000 units. So there is the total units to account for. So let's start with 5,000. Okay, they said that 115,000 units went out of finished goods. Okay, so that's going to be keyed in right here. And then I'm going to find 110,000 by backing into it. Okay, so 110,000. And now we're ready for our ending inventory. We don't know what it is. We know they're 35% complete. Okay, so how we found it is when we did these here to find the total units, we're going to key that in. So this is going to force them to a certain number. So if both of these add up to 123,000, then we can subtract. All right, so we can subtract the completed and transferred out from the total units, and then we will know how many whole units sit there in inventory at the end. The end, they are 35% complete. Okay, when it comes to direct materials, these don't even get started until the direct materials are in this account. Okay, so we don't need to add any more. It's fine, but we're not finished with conversion. In fact, we're only 35% finished. So you take 8,000 times 35%, and I'm just checking my math here, and you get $2,800. So we are just still doing our units. They didn't have us do the units in this one, but you're going to have to. Okay, you're going to have to. Here comes step 3. Here comes 165,200. I keyed that in there. That's the direct materials cost for the period. Here are the two numbers that go together for conversion costs, which is the 291,800 and the 113,500. Those two get added, and I put DL plus manufacturing overhead here. So that is 405,300. Now we're going to do the calculation for the cost. And in fact, they're telling us here is the cost per unit, $1.40 and $3.50. Well, we're going to make sure that it works. Does it work? Yes. Yes, it does. Okay, so now we're going to use these numbers to fill in to allocate the costs. Okay, so we'll have a number for beginning. We'll have a number for started and completed, and then we'll have the ending inventory. All right. Before we do, let's go ahead and put in, we've got 13,600 in beginning work in process, 165,200 in direct materials, 291,800 in direct labor, and then 113,500 was applied to WIP. If you add all of these together, you're going to have total costs to watch for or to be as a check figure of 584,100. Okay. We don't know what the ending is yet, but we will. Okay, so now we want completed and transferred. Okay, is 500. Here it is, completed and transferred. So when you do the math, remember that's 110,000 times $1.40 and 110,000 times $3.50. And then I add across. Those are the costs to account for. Yep. Excuse me. Okay, I'm going to put that back. I keyed this in here because sometimes you know a total and you've got to find something else. And that's what happened with this one. We didn't know what this was, but we could add it, right, by doing the math. So the math here is 8,000 in ending inventory times $1.40 of direct materials cost for a total of 11,200. And then we take 2,800 times $3.50 of conversion cost per unit, per equivalent unit. And yeah, we can add across. That's no problem. But I think I went ahead and calculated it just to see what I could do, but you can highlight this and find out that's $21,000. Okay. So now we can start to put this stuff in. All right. I forgot. So our total for beginning, remember it started with 13,600 and we added 10,500 to finish those 5,000 units. So beginning is finished with 24,100. Then the total cost for our started and completed, okay, is 539,000. And our cost of ending work in process, okay, which is your 2,800 units, is 21,000. Okay, so let's check our work on that. And I think we're good. Oh, hold on. I've got to fix something. So let me see what I have done. So started and completed. Okay. This isn't started and completed. This is cost of units transferred. Ooh, so be careful. I misread it. Okay, but all right. So I'm going to put 563,100. That's how much these are. We had to find that. Okay, we had to find it. So let's key this in. 563,100. And remember, this number is these two added together. Okay, let's check it. There, that's better. Okay, now we want the cost per unit of the completed beginning work in process inventory. Cost per unit of the completed Okay. So the cost per unit, I believe it's $4.82. Okay, so you say, how did you find that? If you take the total cost to finish all 5,000 of those, which are 40% complete, so we've got to take, yeah, we did the 60%, 60 times 3 grand, and then here's how we got this number. Okay, so we take the 24,100 in the beginning inventory. Let's think about this a minute. While this is the beginning of the month, okay, it is actually the ending of the month before. Okay, the ending of the month before. So we're going to put that there. The beginning WIP is 5,000 whole units. And then when you divide the 24,100 for all the costs in the beginning, we divide by 5,000, you get $4.82. So let me highlight that. I believe that should be right. If it's not, we'll try to fix it. Okay, so yeah. All right, so now what we're going to do is, it says, did the production cost change from preceding period? Okay, so yes, they did change. Okay, yes, they did. And here's how we know. Here's how we know. So if this is the cost of unit of the completed beginning work in process inventory, if you take $4.82 times okay, that's this added together right here. That's this. So this is the beginning inventory of 13,600. We added 10,500 to that beginning inventory. And there is the cost of the beginning inventory. Then we're going to divide by 5,000. We get $4.82. We're going to subtract the direct materials cost, because direct materials cost from, it said from the preceding period did not change, okay? So if this is, okay, so if this is the beginning cost per unit, the beginning of August, that means we're going to subtract $1.40 from it, and we'll get conversion costs for July of $3.42. Okay, what is the conversion cost for August? Here it is. Conversion cost, $3.50. So there is an 8-cent difference. Okay, and costs have gone up. Conversion costs increased by 8 cents. So it is an increase, but they didn't ask us how much the increase was. Okay, 2 more. We're going to try to get through with this. Okay, this is a set of journal entries. Okay, for having more than one WIP. So I have started with some T accounts. So if you want, you can make yours, but I have a blank T account here, blank T accounts. I've started with materials. I've put in the beginning balance of 2,810. We've got a WIP for making and a WIP for packaging and a finished goods and a cost of goods sold. Okay, you're also going to want a manufacturing overhead for making, manufacturing overhead for packing, wages payable, accumulated depreciation, and a prepaid insurance. Now, let's put these in. So finished goods it's $12,790. Work in process making gets $4,970. Work in process packing, $6,480. So I put all of these in because they were the balances as of July 1st. Now we're going to go through these journal entries. I've made a copy of it right here, okay, of mine anyway, so that when I scroll up, I don't have to. So the first thing we're going to do is purchase materials on account. So I've got a materials account and I have an accounts payable account. Okay, I guess I don't. I guess I don't have an accounts payable. That's fine, but you know it has to. So up goes purchases for $159,330. So here comes the journal entry. Oh, okay. All right, that's fine. Oh, I must have got out of this because I had this all done. All right, well, that's fine. Okay, so we're going to get materials. So I'm glad I did this, 159,330. And accounts payable, 159,330. Okay. All right, B, materials requisitioned for use. So remember, we've got two WIPs now. So we're going to debit the making department and debit the packing, okay, for the materials, right? So materials are going to go up. This is going to be 105,250. And then this one's going to be 36,610. And then our indirect materials are going to go into manufacturing overhead, and they each have their own. So I got 4120 and 1480. All right, and then all together, this is coming out of materials for 147,460. So 147,460. I'm going to check my work now. 147,460. Okay, let's check our work. We should be all right. Okay, the next one then is the labor. Okay, the labor, kind of the same idea. Direct labor goes into both work in process, manufacturing overhead, but it comes out of wages payable. Okay, it comes out of wages payable. So you just need to key in what your problem says. So here I go. 75,190, 50,750, 14,560, 26,100, and that all adds up to 166,600. Okay, that should be good. All right, now we want D, depreciation. Okay, depreciation. So each manufacturing overhead is going to get depreciation. Okay, so we're going to pick manufacturing overhead for the making department, manufacturing overhead for the packing department. And we're going to put those two amounts in. So here comes the depreciation into manufacturing overhead. And then it's all going to be credited to accumulated depreciation, which I believe I have here. Let's see here. Accumulated depreciation, 2570. Yes, 25,070. Okay, go ahead and check it. All right, we're ready for E now. Okay, E is expired prepaid factory insurance. So Okay, so then we want manufacturing overhead, making, manufacturing overhead packing, and it's coming out of prepaid insurance. Okay, 2,600. 1,040 prepaid insurance. You add those two numbers together. Hang on just a second. Prepaid insurance down here, 3,640. Okay, and 3,640. And whatever we've done, we'll go back and make sure that we've accounted for everything in these accounts, because you're going to need to know some balances in these accounts to answer at the bottom. Okay, we're ready for F. We're going to apply manufacturing overhead. So applying it, that's why I've taught you this. Okay, applying it. Let me go ahead and put it in here. So we're applying it to work in process, each of those, and then each one will be a credit to that manufacturing overhead account. All right, so the first amount applied is 35,880 and 39,640. And then you just offset it with which manufacturing overhead account it goes to. Okay. All right, and now I'm going to put these in. Okay, so manufacturing overhead is 35,880. That is a credit. Okay, I have 4 debits. Where did they come from? So if you go up here and look, manufacturing overhead making 420, I put it in there. 14,560, I put it in there. 13,730, I put it in there. In manufacturing overhead, 2,600. This is the first credit. Okay. And then same for manufacturing overhead packing. The first one is 1,480 up here, and then 26,100, and then 11,340, and then 1,040. Okay, and its credit is 39,640, because you're going to need balances in these pretty soon. Okay, now we are production costs transferred from making department to packing department, 216,940. Okay, so 216,940 is coming out of whip making and into whip packing. So we want to pick work in process packing. And this is the amount that we finished, right? Yep, amount we finished. And then it's going into, we're coming out of work in process making. Be careful so you can see it. 216,940. Okay, let's check our work. Make sure we didn't key something incorrectly. Okay, we're ready for H now. H is production costs transferred from the packing department to finished goods. So out of the packing department and into finished goods goes 341,430. So it's going into finished goods because they're done. Okay, those can be sold now. And then it's coming out of work in process packing. Okay, the last one is cost of goods sold. Cost of goods sold is, and they're telling us what it is, 342,680. 342,680. That's going to come out of finished goods and go into cost of goods sold. So cost of goods sold, they're telling us what it is. 342,680. 342,680. And it's coming out of finished goods. All right, let's check our entries here. Make sure we are on the right track. Make sure we don't have any red X's. That's quite a few journal entries there. That's going in and among, that's just two work in process accounts and two manufacturing overhead accounts. Now they want to know some of the balances, right? So here's why I did this. So if you add the debits minus the credits, my balance is 14,680. Okay, for materials. Going to WIP making. Okay, if you add up the debits and subtract the credits, I got $4,350 in the ending balance here. And then 8,990 when you add all the debits and subtract the credits. Okay, $8,990, and then finished goods had a beginning balance. We brought some in that were finished from WIP packing, and then some were sold. All right, so we now have a balance in finished goods of 11,540. Okay, so I know you were probably wondering why I did this, but that is why. Okay, compute the July 31st balances of both those manufacturing accounts. So let's start with making, right? We're going to start with making. And sometimes you have to add up both sides to see which one is larger, but I know that this one is larger. So this one is going to take this credit and subtract the debits. And since we still have a credit, it's $870. And this is the credit side. What does that mean? Remember, this side is also applied. So this is, here is over applied. Over applied. So just in case they ask, or if you see something about it, over applied. Okay. Now we're going to the other manufacturing overhead. If you add up this side and subtract this side, you get a debit balance. Okay, so a debit balance means something different. So if this credit balance means over applied, then this debit balance means under applied. Okay, so I think that gets us where we want to be for these journal entries. We have one more to do. My goodness. Okay. Going back to the cost of production report. Okay, I'm going to give you a copy of one of these from the book, but here's mine. Okay, here's mine. So we have the roasting department on March 1st. Okay, so we've got 7,200 whole units to 7,200 beginning units to account for. Okay, 7,200. Then we received enough for 324,000. 324,000. Okay, so when we add down, I've done that already, 331,200. Okay, so far I think we match. Okay, now we're going to fill this in. And remember, total units to be assigned cost has to come to 331,200. Okay, so where you put that in, just in case you need it. All right, we're going to start with 7,200. So we're just basically going to repeat this. We No, oh, this is why I put this over here. I copied and pasted this over here so I wouldn't have to scroll up and down so much. So now the transferred out is 325. Yep, 325,000. Oop. Transferred out. Okay, and yes. 325,000. So we're going to be able to find both of these. What's the number that makes 7,200 equal 325,000? It is over here in my spreadsheet, 317,800. Okay. And then the ending inventory, these two numbers should add up to that. So you get the ending inventory by the total units minus the transferred out, and there on my spreadsheet is 6,200. Okay, so that should be good. Okay, now we're going to talk equivalent units. Remember, the beginning inventory already has all the direct materials they need, so that's going to be 0. How complete is inventory in the beginning? It is 2/5. 2/5 is 40%. Okay, so that's what I have here. 40%. So you need 60% to finish them. So 60% times 7,200 gives you 4,320. Okay, so that's, now the nice thing about started and completed is you get to use that same amount across there. Okay, now you're just going to add down. Okay, add down, and mine is 322, 120. Okay, and all of the ending units have their direct materials. So we're just going to make it match. Okay, and we're going to add down. Okay, and then how complete are the ending WIP balance? They are 40%. Yep, so I messed up putting in that 35% there. Okay, oh, I'm down here. Sorry about that. Uh-oh, hold on. I'm going to have to double check this stuff and make sure. Okay, yep. I messed that one up right there. So I want to make sure that, oh, make it let go. Okay. Yep, you can get real confused really fast. Okay. So what I'm trying to get to is it really should be whole units times 40%. So I'm going to change that. Okay. I did it okay over here. Okay, I did it okay over here. 8,000 times 40. Remember, if it's the ending, you just take it times the completion amount. But if it's beginning, you have to inverse it and take it times the whole units to get your amount. Okay. So let's go ahead and put in 2480, and then we add these two together, which is 324,600. Okay, now we're ready to start working on the cost. So this is steps 1 and 2. Okay, now we're going to do steps 3 and then steps 4. All right, so the total cost for direct materials, right, is 518,400. So how do you know that? Because here's my little sheet. 518,400. Key that in. Okay, go ahead and key in the conversion cost. That's these two added together, which is what I have right here. So when I look at this, I have both of those numbers added up. Okay, so Added up, it's 129,840. Okay, the total of equivalent units. Total equivalent units. So we're going to use. Okay, we just found our units to be assigned cost. Yes. So total equivalent units. Let me just make sure this is good. Because what we're trying to get to is the cost per equivalent unit. Okay, our total equivalent units is right here. Okay, it's right here. So we're going to fill that in. Okay, and then we're going to do the math. 324,600. So what this is going to be is this total divided by that number. This total divided by that number. Okay, you should get $1.60 if I'm doing it right, and 40 cents per unit. So what we just found that direct materials is $1.60 in direct materials per unit, and conversion costs are 40 cents a unit. Okay, let's check it. Let's check it, make sure it's good. Now we're going to go back to the beginning, the inventory in the beginning, 12,240. Okay, the costs incurred in March, right? Costs incurred in March. That is all of these added together. Okay, so I have all of these added together right here. I got 648,240. 648,240. 648,240. Okay, and then we're going to add down. Okay, our total costs should equal what we've got total costs in here for 660,000. Okay, let's try it. 660,480. And we're going to check it. Yep, we're still on track. Now, we never did do this one over here. Okay, but let's go ahead and do it. So ending inventory costs, we haven't done that yet. Okay, we just haven't done it yet. But we already know ending WIP. If you go back up here and look, they didn't give it to us. Nope. No, they didn't. Okay, so we have to wait and find it. All right, and the total cost, this is where it'll be. So our group one, okay, so the first thing we're going to do is to complete inventory in process. So 12,240, you just repeat it. So then do we have to add anything to beginning inventory for direct materials? The answer is no. No, we don't. But if we do the math here, we take the partially completed in conversion costs times 40 cents, and we get $1,728. And then that adds up here. Okay, and then the cost completed. So when you add these two together, okay, you get 13,968. 13,968. Okay, now we're looking at started and completed. Started and completed is using the same units times its direct materials cost. Okay, so this first one is 508,480, and then this one, cost for started and completed, is 317,800 units at $40.40 a piece. Okay, is 100. Okay, let me finish this out. Okay, that is 127,120. Okay, and then we're going to add across for 600. 35,600. That is started and completed. Now we can get to transferred out. Transferred out is 649,568. Now we're ready for ending inventory. Okay, ending inventory cost. Okay, so here's how we calculated it, and it's 35% complete. So we calculate it by, there were 6,200 units in ending inventory times $1.60 gives you $9,920. And then the ending inventory for here is 2,480 units times 40 cents gives you $992. We're going to add across. For that is 10,912. That is ending inventory cost. So let's put 10,912 here. And now let's put so these two have to add up to this too. So now let's put 649,568. And now all three of these add up, which is nice. Okay, so once again, the total cost to be assigned will match this one. Total cost to be assigned is that much. And we got that several times. Uh-oh. Hold on. I must have miskeyed. 912. Okay, because I'm missing. Okay, let me add them up here. There we go. Now they all match. All right, this last question is a little tough. What they want to know is assume that March 1st. So if you think about March 1st, that would have been, since this would have been the end of February, right? So we're talking beginning inventory. Let's put down the cost of the beginning work in process unit dollars, okay? The dollars, cost of the beginning work in process, okay? At the first of the month. So this really should say cost of the beginning work in process, not completed, but the cost of the beginning work in process, cost of the beginning, and I'm going to put March here. Okay, so what is the beginning of March was the ending of February. Okay, so now let me put cost of the beginning work in process March, also AKA end of February. Yep. February end. Okay, so there we have it. So you don't want to use this inventory amount. You want to use this one. Okay, so that's what I did. How many units are in beginning WIP? Beginning WIP has 7,200 units. When I divide 12,240 by 7,200 units, I get a beginning cost per unit of $1.70. Okay, $1.70. Then it says, assume that March 1st, the work in process inventory includes $10,800. So I'm going to put $10,800 and I'm going to divide by 7,200. And there is, of the cost per unit, there is part of it, right? So that is $1.50 of the $1.70. Okay. So if you take, so that's pulling that out. Okay. So then the remainder, if you add 10,800 and 1,440, you get your 12,240. So we have 1,440 remain. We're going to take 7,200 times 40 because that's what our beginning inventory is all about. We're going to use 7,200 times 40. Okay, times 40, and that is the 288. Okay, and then we're going to simply divide this remaining total. I would never ask this on a test. We're going to divide that total by 2,880 units to get 50 cents a unit. All right. So 50 cents is conversion cost. Okay, and that is the conversion cost in February. But we calculated the conversion cost for March as 40 cents. So our conversion cost has actually decreased, and it's by 10 cents a unit. Okay, now let's look at the direct materials, right? So direct materials we figured out is $1.50 of the total product cost of $1.70. So there is $1.50. And how much was our direct materials cost per equivalent unit? It is 160. So this is an increase. So our direct materials costs increased by 10 cents. And our conversion costs decreased by 10 cents. So there you have it. Okay, I would never ask this much. Okay, but yeah, this gets pretty complicated. So that's all I have. I'm going to say goodbye and say adios to chapter 3 at least. Don't worry, I'm not going to test you this heavily on this, but this gave you a good dose, excuse me, of what this is like. So, okay, I'm going to say stop my share. Say goodbye for now. We will see you on the next video.